So operating activities, examples is cash sales to a customer, collections on credit sales, receipts on interest revenue. All of this is short-term. All of this would be captured in our operating activities. These are inflows. Outflow examples, when we place suppliers for goods, when we pay on interest owed, for paying salaries and wages, paying taxes, or just paying general operating expenses, sales, marketing, and administrative expenses. That'd be a good example of a cash outflow for operating activities. You'll need to know on your exam inflows and outflows for operating activities and examples. I'll test you on this. Examples of inflows from investing activities: if we sell long-term assets, plant, property, and equipment. We sell long-term investments, again, long-term assets, anything over a year. If we collect principal on a notes receivable, that was long-term. If we're selling or discounting our notes receivable. Cash outflows, it might be if we're buying those investments, buying that property and equipment, or loaning money in return for a notes receivable. And financing activities are going to be the equity and investing side of things. The equity and long-term liability side of things. So if we're issuing common stock or preferred stock and receiving cash, that's a cash inflow from financing. If we're reissuing our treasury stock, that's a cash inflow. If we're issuing short-term or long-term debt, generally talking about long-term here, that's going to be our part of our financing. If we're making contributions from the owners, that's buying shares, that's going to be financing. Outflows, we're going to be talking about main thing, paying dividends, paying withdrawals to the owners, purchasing stock, or paying off debt. All parts of financing. There will also be a disclaimer in your statement of cash flows for any non-cash activities, any significant non-cash activities. And so those would be where we are retiring liabilities or we are purchasing assets, but we aren't using cash. So some of the most common are retirement of debt by issuing stock. So if we give our debtors stock in exchange instead of cash, we'd have to note that in our statement of cash flows. If our preferred stock are converted to common stock, there's no cash. So anytime you get a question, if I give you a question on what's a non-cash investing or financing activity, just look at the question and say, was cash changed hands? Did anyone change cash here? So retirement of debt by issuing equity stock. What happened? We reduced debt by issuing equity. I don't see any reduction in cash or increase in cash, so it's non-cash. Conversion of preferred stock to common stock. Preferred stock went into common stock. Doesn't sound like there was cash there. Purchase of long-term assets by issuing a note or bond. We got long-term assets, but we didn't pay cash for it. That makes it non-cash. Non-cash assets for other non-cash assets. I mean, that's kind of self-explanatory. If there's non-cash, it says non-cash in the word. Or purchase of non-cash assets by issuing equity or debt. So if I'm buying plant, property, and equipment with equity or debt, most common of which is generally debt, right? So if I buy a car for my company and it's I borrow the money to buy the car, then it's a non-cash activity. We still need to disclose it. Other common reconciling items on non-cash activities might be disposables of plant, property, and equipment, or the exchange of plant, property, and equipment. So that's really the four pieces, right? The four pieces: operating, investing, financing, and non-cash investing. And we're going to be we're going to go over reconciling it using the indirect method. And the whole goal of this is to just understand how cash is changing hands for significant transactions. So any questions so far before we go into more detail? Remember, we're always looking at inflows and outflows. So on one hand, how are we getting cash in the door? On the other hand, why is cash leaving? And so we do this privately with budgeting, right? We might say, well, we made $10,000 in the last quarter from our paychecks, but we spent $12,000 on eating out. And so we have a cash outflow of $2,000 from our budgeting. So this would very much mimic how people might think of their budgeting. You might say, well, I spent money on groceries. That's an operating expense for myself. I need it to live. I need it to run my life. But then I also invested in some stock. That might be my investing activity. And I also paid off some of my student loans. That'd be cash outflow for financing activities. And businesses would think of themselves the same way, right? So always try to bridge the gap of understanding. Don't think about it just theoretically, but understand there's a true practice to this, and there's a true reason for us going over the statement of cash flows.